Hi, welcome to Personal Finance and Coffee Podcast. I'm your host Gabriella, and on this podcast we talk all about finances. We talk about saving money, investing, getting out of this rat race, paycheck to paycheck. And welcome to this podcast. I encourage you to listen and take action because at the end of the day, you are the CEO of your money. Enjoy the podcast. Welcome. This is episode 7 of the Personal Finance and Coffee Podcast. Today we're going to talk about life insurance. I'm sure all of you have had someone come to talk to you about having a life policy, having an EduSave. It could be someone from Prudential, it could be Jubilee, or any other insurance company. So I'd like to talk about what is life insurance? Is it really for me? Does it make sense? How does it actually work? So life insurance comes in different forms. There's EduSave, but generally life insurance, what does it do? What is it all about? Life insurance is basically setting money aside on a monthly basis that in the event of unexpected death of the person who is putting that money aside, the dependents who are listed, the dependents will receive a certain amount of money to make it possible for them to continue with life. If they're children, they can continue with having an education. If it is a spouse, they're able to continue to maintain their lifestyle as they get back on their feet. That is what it does, basically. So, for example, as for me, if I do have a life policy, life insurance. So if I have life insurance, it means that if, for example, if tomorrow, God forbid, when I'm on a border and there's an accident and I'm not around anymore, my children will be able to receive some money that will give them a push in terms of education and fees. Because while I am alive, the income that I earn makes it possible for them. Whatever I contribute to the table, it does something. So my absence creates a bit of a gap. So life insurance covers that gap as people are trying to get back on their feet or get their general bearing. That is the purpose of life insurance. Now, the people that usually take it are parents, but parents in the context of children's education or generally people who rely on their income. Let me give an example. If someone has their life insured up to maybe 10 million, let me use 10 for easy mathematics. At the time of death, the dependents will receive 50%, 5 million. They will receive 5 million at the time of death. Now, they will stop making payments. So this insurance policy starts from 5 years. So you can pay for, you say, I will pay 100K every month for the next 5 years. Or any year number. After 5 you can choose 6, 7, 8, 10, 20, depending on what you prefer. Now, if you've said, for example, I'll save, the minimum is 100,000. If you say I will save 100,000 every month for the next 5 years, then God forbid in the second year something happens, the dependents will receive 5 million. And then they will stop paying that 100K for the next 3 years. So when the policy reaches the 5th year, they will receive the full 10 million. So in total, the dependents will have received 15 million. That is how it works. Now, if, thanks be to God, you make it to the 5 years, you will receive 10 million. You will receive 10 million. That is how it works in terms of receiving the money. Now, the other way that you can receive money is if you're unable to work. If you have a disability, they will still make payments to you in the context of, if they'll still make payments to you in the sense that you will still receive 5 million at the time of the disability, you stop making payments, and then at the end of the 5 years, you'll receive the 10. That is how it works. There are some questions that people usually ask. One of the questions is, what is the interest rate? Because when people come to tell you about insurance, sometimes, they'll tell you it's an investment, and after you put the money aside, you receive some interest. In the documentation, they usually put the interest rate is 3%. And then there are those who will tell you that, but 3%, I can get a better rate somewhere else. That is true. Life insurance is not an investment. So if you have a life policy, this should not be the only thing you're doing. There are other areas to invest money in. Life insurance is primarily for protection for your dependents. Receiving the money back after 5 years is something that is nice, and once you get it, you can do other things with it. But you need to keep in mind that if you're looking at it as an investment and your only fallback plan, that is not feasible, let's just say. So the interest rate is not high. So when you're entering into life insurance, if you decide not to do it, and your reason is because the interest is low, keep in mind that the structure of the policy is for protection. So that is interest and how much you receive. The next question that people usually ask is, I don't have children, I have no dependents, so why should I have a life policy? Now this works because this feeling of you've been working and earning for the past 5 years, but you have nothing to show for it. It's not a nice feeling, let's just say. You've legit been earning money for the past 5 years and you've lived. That money has not done nothing. You've eaten, you've paid rent, you've had some parties, you've got a new phone, maybe you have a car. But in terms of like assets, to say, okay, I have this plot of land or I have this business that I started, it's not there. Every time you think about, I want to start a business, you're like, I don't have capital. But you've been working for the past 5 years. So this is where life insurance comes in. If you know yourself, you're like, me and money, I'm not very good. Every time I set it aside, I spend it. Now this would work very well in that scenario, because you will put the money aside and at the end of the 5 years, you will receive a lump sum. And yet, if you weren't putting it in life insurance, you would not have kept that money for 5 years by yourself on an account. You would have spent it. That is where a person would recommend life insurance, because you know that you will have the money saved, and then you will also have some interest, and then you can decide to maybe buy a plot of land, or you can decide to start a business. There are other ways of doing this, but that is one other reason why a person would take life insurance even when they don't have dependents, because you can know, because self-awareness is important. You can know that me and money, I think I need some help in this way, because when you have life insurance and it's a standing order and you receive your salary on the account, it gets deducted every month. So it also removes the chances of you second guessing and you're like, Yeah, that's another reason why you would take it. Now, the next question that people ask about is, what happens when I've made a policy for 5 years and then it's 3 years in, or it's 2 years in, and I've lost my job and now I can't make the payments. What happens? This is what happens. If you can't make payments after 2 years, the truth is there is no insurance company that will give you your money you've saved for 2 years. Let's be honest. If some agent is there telling you they'll give you money after 2 years, that is not true. They only give money 3 years. Once you make 3 years, that is when they give you money. And one, they will not give you any interest. They will give you only what you put. Sometimes they even give you slightly less. This is the reason why. When you sign those documents to start this policy, it's a contract. And a contract that is supposed to go for 5 years. There are terms and conditions, but I know Ugandans usually don't read these things. So hopefully you find some value in this podcast. Now, when you sign those documents, it's a contract. So saying that after 3 years, you can't make that payment, you can't make it to the 5 years, and there's no valid reason. You're not sick, you're not what, you're not disabled. That is breach of contract. For all the lawyers out there, that is breach of all those who have watched Suits. Yeah, it was a nice series. Anyway, the point is it's a breach of contract. It's a breach of contract, which means that you will have to forego the interest, and then sometimes they'll give you money with a little less. It will not be the exact money that you saved. So that is what happens if you want to stop that policy midway. I would recommend you wait for 3 years. Only cancel after 3 years if you must. The duration that it takes, it's not complicated. It's not complicated. Keep your policy document, submit the document, fill in some forms, and you'll have your money. It usually doesn't take long. Now, if, for example, you're in the second year and then you're having income challenges, maybe for about 6 months or 7, but then you get another job, and now you want to, how do you continue the policy? This is what happens. When the policy spends a certain amount of time, it lapses, and then you have to, like, it's inactive, let me say. So you have to reactivate that policy. How do you reactivate it? You can get a lump sum and pay if you missed for 6 months and you're paying 100K every month, you pay the 600K upfront, and then you will still receive your money on the same date after the 5 years. There, nothing changes. You just continue. But if you're like, I don't have this amount of money, I don't have the money for 6 months, then you will extend the if you're supposed to receive the money after 5 years in January, then you will extend it by 6 months that you missed paying, and pay in June. You pay in June. So that means they will pay you in June. So that means you maintain the 100 from the time that you're ready again. You only extend the time you receive the money. So that is how that aspect works. Then something else that happens is another question that people ask is, yes, life insurance is affected by age. The younger you are, the more payout. When you go to, for example, a Prudential page on their website online and you're making a quote, they ask for your age. A person who's 27 will receive more money than a person who is older. There's a way they calculate it. And the reason is because of the time period and the risk. Because a person who is older has higher risks than a person who is younger in terms of medical issues. So the amount received is influenced by age. Just so that you're aware of that. Yes, I think that is how it works. Personally, I would recommend it if it solves these issues. If you feel that life insurance is of value to you, then take up a policy. But if you feel like it does not make sense for you today, then chill the policy. There are no rules in these things. Personally, I find it valuable. It makes sense for me for the 2 reasons that I've given. 1, I don't want to work for 5 years and then ask myself, where's the money? Or what, that is 1. But 2, I have dependents, so it also comes in handy in that sense. The minimum starting amount is 100,000. Yeah, and then when you sign up and you get a document, that life policy document, protect it like a land title. Guys, you will need that policy document when you're claiming that money. Your dependents will need that document when they're claiming that money. And if you, for example, someone can get that document and actually use it as security to get a loan, because having that policy document means that they can receive money. So that document is actually important. Don't mismanage it. That's just a tip. Yeah, I think that is all I have to say about life insurance. I would recommend it. So let me end this episode with a life story about life insurance. When I got my first job in 2009, I got a life policy immediately, because from the word go, as like, I started with 100K and it was on standing order. Now, 3 years into my policy, we had some loans, and they were accumulating, because when you miss, the interest rate was high, our income sources had reduced, and we were really suffering to clear this loan. So it made more sense at the time to cancel this policy at 3 years and clear the loan, because the interest was like compounding, interest on more interest. So I at the time I had it with Jubilee. So I got my document, I went to the Jubilee offices, and then I submitted them in. In about a week, I had my money on the account. It was a little less, but not by much really. It solved my problem, let's just say. I cleared it, and that went well. So once we were stabilized, I decided to get another policy, because I still needed it. I still found it valuable. Now that's an example of how it bailed me out. It was not ideal, but it solved the problem at the time. Now, if it was not there as my plan, because at the time I had to do that, I didn't have any other option. I didn't have an emergency fund. It was literally like last resort, because the loan due date was approaching, and if you default on that date, it has other repercussions. Anyway, that's just my story with life insurance. I've had it, I've cancelled it after 3 years. I legit got my money, so now I've started another policy. This time though, I've done it with Prudential, but we'll see how it goes. So I hope this podcast has answered any questions you've been having about insurance. If there's some questions I've not answered, feel free to ask. I am in the links in the notes. I'm going to put a link to our Instagram page. You can DM me and ask if there's something I haven't answered, that probably I haven't answered in this episode. Yeah, so just only take life insurance if it makes sense for you. Don't do bandwagon, because everybody has. If it makes sense for you, do it. If you believe in it, then take a policy. Hi, welcome to Personal Finance and Coffee Podcast. I'm your host, Gabriella, and on this podcast, we talk all about finances. We talk about saving money, investing, getting out of this rat race, paycheck to paycheck. And welcome to this podcast. I encourage you to listen and take action, because at the end of the day, you are the CEO of your money. Enjoy the podcast.